So Brent is Acumen Learning's Chief Operating Officer and has been with the company for over 10 years. He has a PhD in Industrial Organizational Psychology and an MBA in Finance and Accounting. I also know Brent personally. He's a really good guy, decent golfer as well. And with that, Brent, I'll turn it over to you.
Well, thank you, Stephen. And that decent golfing, I don't know how I would describe a decent golfer, but I enjoy it for sure. I enjoy it. Well, folks, good to have you today as we get going and looking at Intel. Man, talk about an interesting company. The today, what's going on with artificial intelligence, the demand for technology. Man, a big player in the industry and kind of an interesting one. Now, we do these every single month, looking at a different company from a different industry. And we picked this one some time ago. A number of people had an interest on it, but it's interesting to see what's happened. A lot has happened in their last few quarters of the year. The last couple years, they have two co-interim CEOs trying to kind of drive results. They got competition. If you have been awake or are live at all, you're familiar with international players getting into AI and the development of the technologies or the equipment behind AI the importance of that today. And so it's kind of a fun one to look at and actually a unique one. A lot of times we look at these companies are doing really, really well. They had a great fourth quarter. Yet as you listen to this call very early on, you're going to get a feel for kind of where they're at just by a few quotes I'm going to share with you as we get going. So folks, good to have you here. Again, Brent Barclay with Acumen Learning. We provide this every single month as a nice follow-on for graduates in our program, but really it's open to anybody. If I was going to give you advice, having worked in this field for many, many years, on how to get better at understanding business, I can't think of a better way to do that than to build your business and financial acumen. And one way you can do that is through engaging around these calls. Now, the tool we're going to give you here at Acumen Learning, we're an inch wide, a mile deep. We only focus on the topic of business and financial acumen. We have a chance to work with many, many great companies you'd be very familiar with. In fact, we've worked with 34 of the Fortune 50 companies providing business and financial acumen training, consulting, et cetera, within those organizations. As you look at this, these quarterly calls, there was one data point I heard years ago that talked about only about 25% of employees actually listen to these earnings calls. If I was going to give you kind of our secret sauce, what kind of differentiates ourselves? This simple framework I'm going to give you: five drivers of cash, profit, asset growth, and people, and then two tools. One's called the executive alignment tool, which is a strategy tool, and then the navigating the financial tool, which is a financial assessment. As you use those, you will absolutely build your understanding of business. Then, with your functional expertise, go back and say, what can I do about it? And that's really our mission with these earnings calls, how to listen to earnings calls. We're trying to help people be more comfortable around it. Whether you're a graduate or not, I want you to have absolute confidence. You can listen to these and gain some value that will help you within your role at whatever company you're with. So with that in mind, I want to make sure our technology is working as Stephen communicated. We're going to do a lot of communication through the chat box. So in the chat box, just I usually say where you're calling in from, but because we are doing Intel and the idea of AI becoming so important, in the chat box, tell me your favorite AI tool you like to use. You got ChatGPT, you got Gemini. There's a number of them. Maybe it's an internal one that you're working with. In the chat box, what AI technology are you using? Your favorite? And if you're saying I haven't, then put where you're calling in from if you haven't ever had that, or just say I haven't had a chance to use them right now. Looks like so far ChatGPT is winning Copilot, of course, an add-on to Microsoft, I believe. Perplexity. I don't know if I'm familiar with that one, but a lot of them that Grok. There you go on your phone. We're seeing this, and folks, as a consulting and training, content developing company, we've seen some tremendous value and some tremendous advancements over the last little bit. I'll be honest, doing these earnings calls, we talk one of the key advantages of AI is how it helps you to be more productive. And when I do these earnings calls, it will usually take me about 5, 6 hours of prep time to be able to go through and do this analysis. I've cut that significantly by building a chat GPT that really helps me to kind of gather the information and at least get this first stab at key concepts, et cetera. It's been really helpful to help us be more productive. So that's a big player in this industry. Well, as we look at the chat box, looks like everybody's comfortable with using that. Well, let me give you one other one. The next one I'm going to give you is I got a quick. Let me go back to my tools here and see if I can find where I'm at. I want to do a quick poll. So the poll is another tool we'll be using throughout our program today. And so here's my quick question. Have you had a chance to attend one of our webinars? How many do I have graduates? So when I say webinars, this experience today, how many have had a chance to participate? Yes, this is my first time, or no, I've attended earlier ones. I think last month, who did we do last month? Totally forgot. uh, Oh, EA Sports. Yes, we talked about EA. It's in the game, right? The idea of their business and how they compete in the market. We do various industries every month, a different group. Not only can you access them by participating, but we then record them. It's part of our YouTube channel. You can go to our webpage as well to access some of this information. Again, a great way to practice building your capability around assessing strategic focus of a business and financial performance. Well, excellent. Looks like polling is working. Everybody's able to answer. As I look at what we're seeing today, it looks like a fair portion, about 50% brand new, 50% are joining us, or 52%. Good to have you with us. These are great ways to continue build your competency around understanding business. Well, with that in mind, here's what I want to do. I'm going to go ahead and jump in and start sharing my screen. We're going to jump into our program now that we know the tools are working just fine. And I'm going to start that with a second poll question. So my question is this: when was the last time you listened to an earnings call? You're coming to a program on how to listen to an earnings call, a webinar. You're coming to this. Well, so when's the last time you listened to an earnings call? It was this year, it was last year. Right now, we're kind of on the back end of the heart of earnings call time. Actually, it still is going to go probably until you might have one or two that will do an earnings call in March, but we've really kind of progressed through the heart of those. They typically start about 3 weeks after the close of the quarter, and they'll go for the next month to a month and a half. So end of quarter for fiscal year 2024 was December 31st. So basically about January 21st through the end of February, you're going to have these calls happening. It looks like a number of you have had a chance, and nobody said they'd rather go to the dentist. I appreciate that. Well, let's jump in and talk a little bit about this idea of listening to these earnings calls. Here's some interesting stats as you think about business and financial acumen in these earnings calls. Only about 95% of there's a stat that came from Harvard Business that says that 95% of employees don't understand company strategy. Well, that's kind of depressing, right? 90% of employees don't understand their company's important business metrics. Now, folks, I'm not trying to condemn your business or the company you're working with or selling into. These are just stats that are provided. What's interesting is you get in a large organization, it gets harder and harder to get everybody on the same page to get high execution. So now imagine you are co-CEOs. Michelle and David, who are co-CEOs. Michelle was the CEO of one portion of their business, their product business. David was their CFO. Their CEO, a gentleman by the name of Pat Gelsinger, resigned in December 1st of last year. So he's backing out. You got these two co-CEOs. You're one of these pioneer, well-known. We all know the name Intel, right? In fact, one of the stats they shared was 7 out of every 10 PCs have an Intel processor in there. So very big player around computers, right? You got a diverse product offering. They're doing CPUs, which we know them for, but there's all this new stuff there, new. It's not really new, but like this FPGAs, that's basically reprogrammable chips. And that's a big part of data centers. And you look to the future of AI, the demand for processing power. These are new technologies that allow them to do that. So they're playing in that space. They got global operations, over 108,000 employees as of the end of December. And now they're in the middle of this kind of transition. Their CEO is retiring, but yet they don't have the replacement yet. So you got these co-CEOs trying to right the ship and go in the right direction. And they're dealing with some real challenges. Top line revenue relatively flat year over year after dropping dramatically coming out of 2022. They actually had a net loss. Now remember, the P&L, right? What does it stand for? Profit and loss. We don't like losses. They have a loss. Their margins are declining, meaning for every dollar they bring into the company, they're getting less profitability out of that dollar. Not only that, but their cash generation is decreasing all around this competitive landscape and what they're seeing in their area. So you got 95% of employees who potentially don't understand your strategy. You got 108,000 employees who potentially don't understand your strategy and potentially don't understand key metrics and measures. Well, the real question is, you think about these earnings calls. What is it you need your employee? What do you need your employees to know? What do you need your customers to know? What about shareholders? Obviously, as your metrics are decreasing, that's going to impact your stock valuation and potential future value of your business. And then what is it you want your partners to know? Intel is the one we're going to use as we take, that's what these earnings calls are all about. And the tools that I'm going to provide for you allow you to look at any company. If you work for J&J, you can use this tool to look at J&J. If you work with Verizon Communication, you can pull this tool and use. What I'm going to do is I'm going to use Intel as the example as I walk you through how to use these tools. Now, here's my guarantee. I'm in my 15th year here at Acumen Learning, been doing learning development for 28, 29 years. Uh, as you look at this, one of the greatest values I find as you do this 2 or 3 quarters consecutively, my guarantee is this: it will absolutely build your credibility, it's going to build your career, and it's going to build your company. Now, in typical learning development experience, there's 3 areas that companies look at. One is leading yourself. So the idea of all the like Gallup Strength Finder assessments, if you've ever done DISC or Myers-Briggs personality tests, it's all about understanding yourself as a leader, right? The second area of focus is leading others. That's where you get in communication, feedback, coaching, delegation, time management, all those leadership topics. Well, the third area companies come to is leading the company. Now, this is the area, what I see is a lot of L&D spaces are really good at the first two. This third is the real, in my opinion, one of the most pivotal game-changing tools. The more comfortable you are around this financial information, the more you're able to quickly assess strategy in the context of financial information. It absolutely changes the way you see the business. And that's our goal here at Acumen Learning, and that's what this tool will allow you to do. So with that, let me walk you through. There's 3 simple phases of this tool. The first, you got to prepare for the call. Then there's those 2 tools, you use them to analyze. And then probably the most important, I mean, star it, highlight it right here. This is the most important. You got to do something with it. So that's what I want to walk you through is the tool. Now, don't worry. At the end of the program, you'll get access to it. You're just going to enjoy, engage. If you have questions, my team will help me. I'm looking at chat box as well as we walk through. But let me walk you through this simple tool. First thing is there was a portion of us that haven't had a chance to listen to an earnings call. So let me give you just kind of earnings call 101. These calls happen every quarter for probably 99% of the companies. They're typically somewhere around 45 minutes to an hour and 15 minutes. By far, majority of them are kind of that 55 to an hour range. Now, every publicly traded company is required to submit to their governing boards here in the United States, at the Security Exchange Commission, their financial performance. Well, not only do I send that information and the whole market gets access to it, I want to have a chance to explain it as a senior leader of one of these companies. So they'll take that time. They'll invite analysts, and anybody can access these. I'll show you how to access them in just a moment. And what's going to happen is the first, typically somewhere around 20 to 30 minutes, they're going to give you prepared remarks. They're going to walk you through kind of what they said they were going to do, how they performed, and where they're going. They'll give you that review. Then they shift gears. The second half of the call is these analysts. Now, it's not you, myself, or others. It's not just individual investors. These analysts come from these large investment companies, right? You're talking Barclays, you're talking Wells Fargo's, you're talking these big investment firms, right? So they're tracking the stock, and they're going to ask clarifying questions. So they've already reviewed the information they send out. They listen to the communication from the executives, and then they say, well, hey, I got a question or two for you. Can you give me a little more color on this? And they'll walk them through. Now, that's the call. That's basically what it is. as you look at these, a lot of times I get executives other and they'll just say, hey, just spend time looking here. Now I get why they do this. This is the executive communication. So if I'm Intel, I'm working with Intel, I can see one of my managers say, just listen to the prepared remarks. You'll get a view from our co-CEOs at this time, what we should be focusing on. Then take that and go and assess what you can do about it. I will tell you, I recommend going through the whole thing. Here's why. Here is where they communicate kind of their marketing, what they want to suggest is going to happen or how they perform. Here's where you get to feel, are they buying it? Meaning, are they having more intensive questions? Are they trying to get more depth? Kind of questioning. Literally, I've heard where an executive talks about, hey, we're looking at rapid growth, and I've had to find an analyst come in and say, wait a second, you keep talking about rapid growth, yet you're reducing how much cash, capital expenditures, how much cash you're reinvesting in your company. Can you give me a little bit more color on why that seems like a misalignment? I mean, kind of questioning their communication. So it's a great opportunity to kind of see if what they said they were going to do, how the market's viewing that. Well, here's what you need to do in the prepare phase. First thing you got to do is you got to locate the caller transcript. Let me show you simply how to do that. And I'm going to jump to this great website. I'm going to share my screen here. Make sure you see it. Here we go. So this great website we're all familiar with called Google. Simplest way to access is just start typing in what you're looking for. So I want Intel. It's already guessing for me. Intel. And I want to say, let's say Q4 earnings, something like that. Now you'll notice it's kind of the AI is trying to predict what you're looking for. So this is exactly what I'm looking for, earnings 2024. But you'll see some other ones. You see, earnings report, earnings release, earnings transcripts. All these are great stuff. I'll just hit that one. Let's see where it takes us. Now you'll notice it's going to give us not only their information, but you're going to get third parties like Yahoo Finance, CNBC, others give you a little information. Motley Fool's a very common one. But I typically want to go to the heart of it. Where can I get this information? So I clicked there. Look at that. I typed in Intel 2020 Q4 2024, and it took me right to the information. What do I see here? Well, because the call already happened, it happened on January 30th. I've got a bunch of information available. If it had not happened, let's say I'm preparing for it, it's just going to have one link. It's going to say webcast. You click on that and you can register. It'll actually give you a little invite you can put in your calendar so you're reminded. It shows you how to log in, etc. But once the calls actually happen, it gives you a bunch of information. So right here, you get what they call their press release. So this is just kind of their press release. They sent it out before they did the call. This is what the analysts take and start to do some initial analysis on how they're performing. Well, because the call's already happened, if you want to, it's already happened, you can actually listen to the earnings call, the webcast. You click right there, you actually can listen to the call itself. Here's the presentation. Now, I love the presentations. Why? They take a lot of information and kind of put it in just a few slides. You can kind of get a feel what they were really trying to highlight in the call. Not all provide those slides, but those that use them, you'll typically get access to them. Here's their prepared remarks. So this is what they said, word for word, their communication to the market. That's a great resource. A lot of times that's what I get access to. Rather than listen to it, I can read through it, I can scan through it. This is stuff you can potentially put in a chat bot and be able to get some key insights, etc. So that's really valuable there. Now, because it's far enough from their call, this is what they have to submit to the SEC. If you haven't ever heard of it, it's called a 10K. Every single publicly traded company, this is their annual communication to the SEC. It's all regulated. You can access financial statements. You can access all sorts of information in this document here. Now, not all will have that available right after the call, but usually they have to have this submitted by 60 days after the end of the year. Anyways, probably more than you ever want to know. How do we get to it? Here's what you're going to do. Open that great website, Google, type in the name of the company and what you're looking for, what quarter you're looking for, and it'll take you right into their information. You can also do it a little different. You can actually go to any company will have an investor relations website. So you can go to their website and go through and find their investor page. So right here, you're seeing a bunch of that information. Here's their filing information. Here's their SEC filings, etc. So folks, that's step one. We got to access the information. So let me jump back here to our slide, and let's go back to where we were. So once you've located, what's the second part of this first step? Well, the next is to review your notes. Now you might say to me, Brent, what do you mean by notes? I haven't ever done this before. That's okay. Well, just like I did Q4, I did that search on Q4. I can do the same thing and say, well, I want 2024 Q3 information. It would take me to the same website. I can maybe review their press release and get a high level of what's going on. Now, once you've filled out the tool I'm going to give you 2 or 3 times, that becomes the thing you'll review. So let's imagine we go through Intel's Q4 today. I give you all this information, we fill it out. Well, then what you do is if they get ready to do their Q3, you just pull that out, review what you saw, and then when you hit Q1 of 2025, you can kind of see, did they really do what they said they were going to do? Well, finally, the last thing I recommend in this initial stage is to meet with your team. What do I mean by that? Well, what I find is you actually going in and doing this with somebody else, you'll get more value. If I'm a leader, I bring my team together and take an hour and review the call using these tools. If I'm not a leader, if I'm an individual contributor, I'd go with a colleague. Maybe I'd go to my supervisor and say, I know our call's coming up. I wonder if we could sit down and kind of go through this document together as a team. What a great way to help our employees understand how our company makes money, how decisions are made around the money-making process. Most importantly, what can I do about that and do that on a consistent every quarter basis. That absolutely will build your credibility, it'll build your career, and it'll build your company. So that's the prepare phase. Well, the majority of my time today is going to be spent in this analyze phase. Let me jump in there now. Now, in order to do this, I want to introduce, because some of you are not graduates of our program, I want to introduce you to this very simple model. I want you to think of this as a mental framework, a simple way to think about business, talk about business, and execute around the business. Now, many of you are graduates, so you're going to help me kind of introduce. We're going to take about 3 minutes. We're just going to introduce this 5-driver model. What I'm going to suggest to you today that there's 5 fundamental drivers, whether you're a $53 billion revenue generating Intel or a small mom and pop organization. There's 5 fundamental drivers of business: cash, profit, assets, growth, and people. Now, by having this simple framework, it allows you to kind of consolidate information into, are they talking about cash? Are they talking about profit, asset growth, and people? I'm looking at a measure. Is this measure a cash measure, a profit measure, an asset growth, or people measure? So it's just meant to be a simple framework to help you assess any organization. Now, let's talk about cash. When we talk about cash in business, it's absolutely valuable, very important there. As you look at cash, as we think about the importance of cash, fill in the blank for me. Cash is blank. What would you say? As you think about corporate America, as you think about the importance, cash is king is a very common phrase. Now let's get queen in there as well. Royalty. Any other thing when you think cash is, what would you say? Oxygen. I love that. Oxygen, vitally important. Yeah, when executives start to run out of cash, you really feel that pressure. Some examples of that over the last couple of years is Boeing. During COVID, they had to borrow $42 billion of cash because the whole industry was devastated. They were struggling with their 737 MAX. They had to get access to cash. It's fuel. It's the lifeblood. It's the rules, right? Absolutely. So if I wanted to understand what's going on from a cash perspective, the foundation of that, I'd look at what's called the cash flow statement. That shows how much cash the company generated. How much did they redeploy back in their business, what you call cash from investing, as well as how did they strengthen their financial position, either getting money back to investors, paying down their debt, also, or holding on to that cash for future investment. Now, when we talk about, so that's cash. Cash is king, vitally important for a business. Profit, on the other hand, is probably the metric you hear talked about more often than not. There's 2 fundamental levers as you look at impacting profitability. This is what I call business 101. If you're in any of my classes, you'll know business 101, 2 fundamental levers. By the way, these 2 levers impact this driver, impact all the key metrics as you look at these key drivers of business. So if I want to grow my profitability, there's 2 things I can do. I can increase one lever or decrease the other. What are those levers? Put it in my chat box, will you? If I want to grow profit, what do I need to do as a business? Okay, so I want to increase my revenue, also known as sales, right? So increase my revenue. Excellent. Also be called revenue, make sure I can spell this one right. It is also known as sales, by the way. Revenue and sales, it's also known as the top line. These are all the same terms. Well, I'm reducing my cost, or some of you call that expenses. Either one, absolutely. Those are the fundamental levers that impacts cash, impacts profit, impacts assets, growth, and people. So fundamentally, as you think about driving business, those are some of the two most common levers. Now, how do I grow my revenue? I can either sell more or I can sell what I'm selling at a higher price. So that's how I drive revenue and then manage my costs. If I want to see what's going on in business around profitability, I can look at that income statement. Now we talk about assets. When we talk assets, you talk about asset strength versus asset utilization, right? Asset strength is all about what do I have? How much cash do I have? Am I in a strong financial position? Do I have a lot of debt? Do I have a little debt in relationship to all my assets? So asset strength versus asset utilization. How do I take all those assets and deploy them in my business to drive greater success, greater revenue, greater cash for the business? Growth is what investors expect, and people are what makes it happen. So those are, as you think about the people driver, that's both the external customer, those that buy or use your product or services, but also your internal customer, colleagues, peers, direct reports. So with that basic introduction, I'm going to shift this up. If you've been with us before, I jump into the tool first, but I just want to give you one quick quote from one of their acting CEOs. I just want you to give me, you got reactions. Do they have reactions? Maybe we don't have reactions to this. Oh, yes, you do. In your chat box, you got little emojis, right? I want you to use emojis. Just listening to this call, I want you to give an emoji that most represents what she's communicating. Basically, as in wow, incredible. Is it, oh, we're okay? Is it, oh my goodness? Give me the emoji as you read through this. It's been roughly 2 months since Dave, that's the other interim CEO, and I stepped in our roles as interim co-CEOs. From day one, we have been working closely together alongside the board to drive better execution of our strategy. There are no quick fixes, and we are committed to improving our performance and rebuilding our credibility through persistent hard work and deliver tangible results. As part of this, we are driving more focused investment across the business. We cannot be all things to all people, and we are prioritizing areas where we can drive differentiated value. Now, that's the start of the call. Give me emoji. What are you seeing there? There you go. I love the different emojis. Yes. It's kind of like, oh my goodness. I mean, this is how we're starting our call. I love the realism, though. I mean, I've seen companies where they're struggling, they're negative cash flow, and they go through, well, we restructured, we did this, but hey, now we're ready to grow. She's kind of setting the stage saying, look, Michelle's coming out hard line saying, look, there's not quick fixes. We can't be everything to everybody. We really got to go after this and figure this out. So I hope I intrigued you enough to say, okay, well, what's going on? Let's figure this out. Well, the first tool that will help you to figure out what's going on is called the executive alignment tool. I love this tool. It allows you to do a quick use of the 5 drivers to assess strategic focus. Now, all my engineers that are on the call, you're going to say, well, come on, is this an exact science? No, it's not. This is just a simple mental model. We do about 1,200 sessions a year, though. And what you'll find is by just listening to the call through the lens of the 5 drivers, it absolutely can help you condense down what's the key messaging, where are they focusing time and attention, and more importantly, what can I do about it? So here's how the tool works. You take the 5 drivers as you're listening to or reading the call, and what you're listening for is, are they talking about cash, profit, asset, growth of people? Now, don't worry, for those that are not graduates and you're saying, I know what cash is, but how should I think about it in the context of an earnings call? Well, we give you 2 things. One is a quick definition of what we mean by cash. The second thing I'm going to give you is some, I call them trigger words, but some examples. These are the types of words you're looking for. And if they're communicating these words, stuff like stock buybacks, debt, issuing stock, dividends, acquisitions, these are all examples of cash. We do the same thing with every single one. There's the definition for profit. Here's some trigger words you can look at, okay? So what you're going to do is you'll listen to, or you grab the transcript and you kind of read, and you're marking. They talk about cash, profit, asset, growth, and people. Then it boils down to 4 simple questions. Question number 1, which business drivers seem to get the most attention? I love the second part of it. And why? What's going on in the business? Second question, what were the 2 or 3 main points the executive was trying to make? Again, in the context of these 5 drivers, what are the 2 or 3 key points the executive executive was trying to make. Question number three, what are their goals and objectives going forward? So you kind of have what were they focused on? What are their key messages? Well, where do they see it going? What's that future focus? And then because it's an earnings call, I love this next question. Okay, if I go all the way and listen to these analyst questions, what did they seem to be focused on? Were they aligned with what was communicated? Were they questioning what was communicated? And then what I typically like to do is a day or two after go see what's happening in the market, what happened to the stock. Now, don't get too carried away. Sometimes things outside of anything to do with Intel may impact the stock market. But if I can track Intel versus competitors, you'll start to see a little bit of how potentially the market's responding to what was communicated. Folks, that's the tool. Now, it's not exact science. As I said before, I'll have 1,200, we do 1,200 courses, different industries, different company. And it's rare that you have exactly the same number of slash marks, right? But that being said, in those 1,200 sessions a year, we find that typically the top 2 or 3 drivers will raise to the top from everybody in the class of about 20 participants. So it's a great way to just simplify the information. And then the action item as you get through the tool is to say, what am I going to do about it? So here's what I want to do. I've got a quote from Michelle. We already did one, just high level. Let me give you a quote and let's practice doing this. So open your chat box. What I'm going to do is I'm going to read through this and I want you to tell me which of the 5 drivers does she seem to be focusing on in this communication. So here's what she said. We're also continuing to simplify our business and become a leaner, more efficient company. And most of all, we're doing a better job of listening to our customers to ensure we meet their needs. Which drivers, as you look at that, just that first 2 sentences, would you say she's focused on? So, which of the 5 drivers? Cash, profit, asset, growth. So we got people there. Okay, so 3 of us have already said people. Where's the people? Well, right here, right? That's a people one. You could make a connection, simplifying our business and, what's the right resources and that's going to impact people within the organization. But yeah, profitability, efficiency. Efficiency helps us to drive growth, profit. Efficiency also could be around assets. One of the big things around assets, remember, financial strength, what you have versus asset utilization. How do you deploy that? So make sure we're more lean in our company, could be metrics. Okay, here's another one. Q4 was a step in the right direction. And it was, and I'll show you some of those numbers. We delivered revenue, gross margin, earnings per share above our guide. Which drivers do you hear in those? There's some great words that trigger words. So delivered revenue, gross margins, earnings per share. What drivers would those be? Okay, all those are going to be profitability drivers. Revenue, gross margin, and earnings per share. If you look at our sheet, those are trigger words. Now, of course, they eventually will drive cash. If I get more revenue, once I collect it, that becomes cash. Gross margins is the difference. It's basically taking your direct costs out. How much profit did I generate before I do the other expenses? So all profit measures there, but it's also above our guide. This idea of improvement, growth, right? Okay, this next one. Intel products executed to drive revenue in the quarter, even as PC inventory continues to normalize. What drivers come to mind there? Intel products executed to drive revenue. Driving revenue, yep, it's going to be profit again, even as PC inventory continues to normalize. So as the amount of PCs out in the market, Intel products is still driving increased revenue, capturing more market share. And then finally, an Intel Foundry, which is it's kind of outsourced chip manufacturing, drove incremental operating efficiencies while achieving key grant-related milestones, which supported solid upside to gross margin. So again, yes, a lot about profit. Upside potentially is going to be growth. You can weave in a little bit of assets. They're speaking specifically around Intel Foundry. Well, folks, that's how it works. Now, you can already notice, just scroll up and down our feed. You'll see profits definitely coming up. You're seeing growth. We got a little bit on some of the others, but definitely profit and growth seem to be highlighted here. Well, here's their CEO, co-CEO, but remember, he's also the CFO. He was the CFO before he became the co-CEO, so he still has that title. But you just kind of scan through. You don't have to read there, but you start throwing into the chat box. Let's fill it out. What are you seeing here? Which of the 5 drivers? What do you see standing out as you kind of work through? I'll kind of underline some of these. It's right here. It's a direct connection. Look at all these numbers. Okay, so our earnings per share is a driver. We got gross capital. What's capital? That's a term, connects to one of our drivers. Oh, right here when it says it, that's pretty nice. Okay, so yeah, we're seeing again a lot of growth and profit, but we're also weaving in some cash here, right? As a result, adjusted free cash flow was minus two. So their free cash flow was minus 2.2 billion. Basically, they take how much cash they generate minus all the cash they put back in their business. It was a negative number. They had no cash left over to get back to investors, etc. Well, folks, that's how it's worked. Now we can spend the whole next, 24 minutes trying to read through all these. We don't have time to do that. So what I've done is I've gone through and done it for you. If you were to do this, yours would not match mine necessarily, but here's what you're seeing. Definitely growth. I'm seeing profit are the top two. I'm getting a lot on assets and actually a lot on cash as well. But if I was going to give you the top two based upon my analysis, even though we may not get the exact same slash marks, whether profit or growth are at the top, doesn't really matter, but definitely those were two focus areas for the company. So the next part of it is to say, okay, let's answer those four questions. Here's those four questions. Which business drivers seem to get the most attention and why? What are the two or three main points the executive was trying to make? Goals and objectives going forward, and then key questions from the analyst community. So let me just kind of walk you through my analysis, give you that feel of what we talked about. Well, first of all, this was which business drivers seem to get the most attention and why? Well, both of those drivers are encapsulated in this slide. Remember, growth and profitability. These right here are all growth metrics: revenue, gross margin, and earnings per share. Well, what happened to those? They all decreased, okay? Q4 of 2024 versus Q4 of 2023 were down. Now, that being said, they knew they were going to be down. And so when they said earlier that we outperformed our guidance, we did. They were able to improve. They thought they were going to be worse than what these numbers actually came in. So although it's growth, it's negative, it's decreasing. They're not growing, they're declining. This one slide kind of captures the two focus areas. So growth was the one, in my opinion, that got most attention. And so why? What was it? Well, here's a few things. On the AI focus area, Intel wants to lead in AI capable PCs with its key processors. Wanted to really step up on kind of the computer side around AI. Their data center, as you talk about growth, again, it's declining growth. And their market share, they want to stabilize that. They admit that they lost ground in the data center market, but is aggressively closing the gap with two new Granite Rapids and Diamond Rapids are two new types of data centers, faster processes, etc. That's what they're trying to go back to market and capture some of that market share they lost from competitors. Intel Foundry. Now that again, that's their third. It's a company they own that produces chips, but they don't just produce them for Intel. They produce them for different companies as well. So it's kind of an outsourced manufacturer. And that's a place they really have lost some international competitors. So from a growth perspective, although they weren't growing, they talked about these are three areas we got to get back to growth. We got to kind of stabilize as we move forward. Well, from a profitability perspective, everything I kind of talked about already, gross margin are under pressure. They're not as profitable as they once were. So what are they doing about it? Well, they're big emphasis on cost cutting and how to be more efficient in what we do. And finally, where's that cash? How are they deploying cash, reducing their CapEx, monetizing assets? So they're taking Altera, which manufactures those, I don't know, I got to be honest. There's a little bit of these terminologies I'm learning myself, but it's a type of chip that they can reprogram. It's called a field programmable gate array chip, and so they're looking to sell a portion of that, their ownership in that, with the idea of eventually spinning that off as a new publicly traded company, kind of getting greater value from that asset than they're currently getting. So a lot about growth, a lot about profitability was their focus. Why? Because they're not growing, folks. They've had 2 years of consistent decrease. They kind of leveled out in 24, but they really want to get back to playing a bigger role in this market. So how are they going to do that? They want to grow, but they also want to grow profitably. So what did they do in Q4 that kind of drives to this? Well, those revenue, gross margin, and guidance was above guidance. So a step in the right direction is how she described that. So I put something out thinking this is what we're going to do. We actually did a little better. So that's a good measure to the market. But if you're not doing so well, even a little incremental, it's positive, but the market really wants you to get back to where you were. And so where are they focusing their time and attention? Significant opportunity to improve on their foundry group. So that's where they're focusing their time and attention. So what were the two focus areas? You had growth and you had profitability. Let's jump into two or three key messages they were trying to make. Well, one of the key messages, look, we're in challenging times, but let me tell you what we're going to do, or kind of what we're as we make this shift. We're really focused around execution and being more competitive in the market. The idea of no quick fixes, but we're working to stabilize our market share and deliver better products. They're trying to improve their market position through better products and more balancing of their cost side of their business. This is kind of a overall concept. Execution matters more than promises. Intel must prove it and deliver. Part of the issues they're dealing with, for example, on the foundry, is their delivery times, getting stuff to their customers. So you got all these customers who want your product, but you can't get it to them. So I go over to Samsung and some of these other developers, get access to it. They're producing it. You can go to multiple places to get your chip produced. We got to execute. We got to have success in what we're trying to do. Otherwise, we're losing that market share. So that was a big focus of their communication. This idea of financial discipline. If the market isn't going as well, just like you or I in our personal life, if you lost your job, your significant other, if you're two-income home, how are you doing? You're running out of cash. You're going to be a little bit more careful about how you spend. And that's what you see them doing. Cost cutting, reducing CapEx, monetizing. They had a 15% reduction of employees, really kind of trying to strengthen their financial position to withstand. Now, folks, I know when we look at these challenges with reduction of workforce, it's challenging. That being said, as a publicly traded company, I've got to be able to drive profitability. I got to generate cash. If we're not doing it, I got to get it more streamlined until I can get it positive to drive more success. And that's kind of what they're doing. The last thing, Intel is all in on AI, but needs to be more competitive with their strategy. That's a big focus area that they're focused on. Then finally, the foundry must become competitive. It was so interesting. Not only must it become competitive, Michelle, who runs the product group, she even said, I've got to have trust that they're going to do it, which gives, I mean, here you got co-CEOs. Foundry isn't necessarily performing as well. Your internal team is saying, look, I got to build trust with you as well. That kind of speaks to the market about, hey, we really need to right size this organization and really drive more competitive and more trust in the industry. So that was a big focus of what they were talking about in their group. And so some of the slides they talked about is Foundry. Here's the results around Foundry. Over the last 4 quarters, this is the revenue they're bringing in. This is the profitability. It's losses. And look at this big loss in Q3 of 2024. Now we kind of balanced it out. And of course, going off of a 5.8 looks pretty good that it's only 2.3. But that's kind of like saying your favorite sports team only won one sporting event in a year, not very good. Next year they win 2. That's 100% improvement, but you're kind of starting from a tough base. So this is what they're talking about. They really want to better their metrics around this and really build their credibility around this kind of outsourced chip manufacturing that they have. So with that in mind, where do they see them going? Okay. Here's what they communicate. For Q1, they're looking at about 11.7 to 12.7 billion in revenue. That's still down. If you did Q1 of 2024 versus Q1 of 2025, they're still down about $500 million, but better than some of their quarters last year. Gross margin, they're looking at 36%. What does that say? For every $100 they bring in their company, they want to generate $36 of profitability from their taking out the direct cost. So from the manufacturing of the product or service. Now that's 9 points down. So it'd be 36.9 is where it was before. So they still see a little bit of bleeding, but they're anticipating trying to kind of balance that out and start to see improvement. Earnings per share, basically flat. So down 18 cents per share. Not the best forecast, as you would imagine, but you got to listen to, think about everything we heard from the initial There's no quick fixes. We can't be everything to anybody. Let me show you some tough numbers. We had a decent quarter. We're kind of digging out of a tough time, and that's what they're kind of communicating. Well, specifics around that. Regain competitiveness in the AI, PC, and data center market. Really wanting to play there and kind of right size that performance. The foundry, get to break even by 2020. Now, remember, we showed you those numbers. They're not break even, they have a loss on the foundry. So they're trying to get efficiencies, effectiveness to where it becomes break even. And improve margins with a new chip they have coming out and get better margins for those new technologies. And then cost cutting efforts, deleveraging our balance sheet, kind of strengthen their financial position is what they want to focus on. So that's all internal. Well, what did the analysts say? Let me wrap this up with the analyst communication. There's kind of a few areas I want to highlight. Here they are. Can Intel close the gap on its data center? They've lost market share. There's some credibility issues that they're working through. So that was a question. Of course, the co-CEOs are saying, well, here's what we're doing about it. Here's what we're trying to do to build that reputation back up. How sustainable is Intel's gross margin at a 36%? I mean, it's been dropping. Can they balance that out and start to get new products in, which allows you to charge a premium price and or reduce costs, be more efficient in how you manufacture to generate greater profitability? Will Intel Foundry attract external customers? A big part of their revenue comes from Intel. So can it compete with the Samsungs and others that are out there? And then what is the role of external manufacturing? That big, how do they play in that? And where do they see themselves going? Real questions around, do they spin off the foundry? Do they divest it, et cetera, were some of the conversations. Well, folks, what do I know? Well, from a strategic performance, they've had some tough quarters. Numbers have been kind of dropping down, but Q4 was a little bit of a bump. They're looking at new leadership to kind of help them in this new transition. There's some definite gaps from where they're at. That being said, the real question is, are they doing the right things to try and recover and get themselves on the right phase? That would be the question analysts are asking. That's what I would be asking as an employee. And I'd be thinking about how can I drive towards some of these key future focus? How can I help us be more competitive in the PC market and data center market? If I'm a part of the foundry, how do we help to get to break even? As I bring new products out, how can we get better margins on those products? That's what I would be thinking about. Well, folks, the next step of the tool is to say, well, let's see what we see in the numbers. We kind of hear all this communication. It feels a little bit challenging, but trying to have a positive spin on it. Let's see what we can see in the numbers. What you've got here is a simple tool. It's called the Navigating the Financial tool. For those that have been in our classes, you'll see a version of this tool. For you, it's specific to your company. What we have here is the most basic key metrics any company might look at. Here they are, the key metrics right here. They're broken up, though, by the 5 drivers. The most common key metrics around cash are going to be your cash and cash equivalents, sometimes referred to your cash on hand, or your cash from operations, how much you generate from your core business. Now, there's other metrics you can look at, like free cash flow, for example, but the most common are those 2. From a profitability, we got total revenue, net income, and then how do I capture a margin? And it gives you calculation. Well, folks, you don't have to have gone through a program or have done a accounting class to be able to fill this tool out. Right here, it tells you where to go in the statements to find the information. So you can quickly do an assessment. Now you might say, well, Brent, I'm not as familiar with these metrics. Okay, go back to that Google website, come to our website. We have a glossary of terms. Click on it and you say, okay, now what was cash from operations again? Click on it, give a quick explanation of it. Then you can go and see how we're performing. So let's go ahead and work through this. I want to do a few with you to practice showing you how to use it. Then I'll fill them out. We'll talk about their numbers and then we'll go to our apply phase. So in the chat box, here's what I want you to do. So let's see. Okay, you got the question. There you go. Okay, sorry about that. Thank you, Brooklyn, for answering that question. So here we go. What is it that we do next? Well, the first one we're going to look at here is we want to get our cash and cash equivalent. So you help me. Based upon my tool, what statement do I have to go to find cash and cash equivalent? Put in the chat box for me, will you? Okay, balance. What's balance referring to? It's the balance sheet, right? The balance sheet, right? The name is a great name because it tells you assets will always equal liabilities plus equity. So let's jump to that. You don't have it, but I put it in here. Hopefully you can see that. It's not very good view of it. Hopefully you see it. So we're looking for the term cash and cash equivalent. If you were in one of our classes, you'll remember that on a US base or a GAAP balance sheet, it's built from most liquid down to least liquid. So we're looking for cash and cash equivalent. When you see that number, as of December 28, 2024, how much cash and cash equivalent did Intel have on their balance sheet? Put in the chat box. Let's just see if we can get that number. So we're looking for 2024. Now, how do you see that? There, you got 2023 right here. You got 2024 right here. So we're looking for cash and cash equivalent. There you go, Tyler. So Tyler gave us both. Here's 23. Here's 24. Yes. So 8249, that's 8,249,000,000. Now it decreased year over year. And the question you might ask yourself, is that good or bad? Now this gets a little tricky. Think of the cash and cash equivalent account kind of like a savings account. It's a place where companies have cash for future investments, for unexpected expenses, unexpected opportunities. It kind of acts like a savings account, like for you and I. Well, where you and I may want that cash in our savings account to keep increasing, investors don't want us sitting on a bunch of cash. What do investors want us to do with their cash? They want us reinvesting or I should say, and getting it back to them in dividends or stock buybacks. Okay, well, let's jump to the next one. We're going to do cash from operation. What statement do I have to go to find this? Help me out here. If I want to find my cash from operation, what statement do I need to go to? Thank you, Tyler, again. Saving me, Michael. Thank you. Go to that cash flow. Here it is for you. We're looking for what's called cash flow from operation, net cash from operating activities right here. Give me the number. How much cash did they generate in 2024? Now, by the way, this is the difference between all the cash that came in from their core operations minus all the cash that came out to run their core operation. How much is left over is what this number is. On this statement, a positive number means cash being generated. A negative number means cash going out. How much cash did they generate in 2024? Eva says it's 8288. Does everybody else see the same number? Going once, going twice? Yep, Jeffrey got it as well. It's absolutely correct. Now, this one, you'll notice the prior year was 11 billion. Now, where the cash flow goes up and down based upon, cash and cash equivalents goes up and down based upon strategy, cash flow, you want that going up every month, every quarter, every year. And that's what you see is a decrease of cash. This is why they reduced their cash capital expenditures. Remember, they dropped it down to 20 billion versus 23 billion. Well, look at that big drop in their cash. They don't have as much cash to redistribute in their businesses. Okay, so there's 8.2. Let me go ahead and do the next two. Obviously, I think you get the point. We're going to jump to, if I want to get total revenue, I got to go to the income statement. Net income, I'm going to go to the income statement. Then I'm going to put the two together and do a calculation. So let's grab them. Total revenue. Now I'm going to do it I did it for the full year because it's a year-end number. So I'm going to pull in that 53,103. Then I'm going to go get the net income, the same statement. I'm going to jump down here and you'll notice it's got parentheses. What does parentheses tell you? Parentheses, what does that tell you when you see parentheses on a P&L? Is it profit or is it loss? Negative. Yeah, loss. We don't like parentheses. That means a loss. It's kind of like if you got your check stub and it had parentheses around it. We don't like that, right? So neither does publicly traded companies. So we pull that in. And I pulled it in from this number right here before they did their non-controlling interest. I run that number. What does that tell me? It says for every $100 they brought in their company, they generated $36.10 in a loss. So folks, we read everything they were reading. We just done this key profitability metrics. Yeah, they're in tough times. Well, I'm going to run the rest of them. I don't have enough time for us to go through all of them, but you just walk through equity ratio, what that's saying for all their assets, what portion of it is in equity. So 53%, that's a pretty strong number. Their return on their assets is a negative number. You never want that negative. And then all their growth numbers are down. Well, let's look at the prior year to see what was happening the prior year. You can see comparatives. Here's what cash is down year over year. We're kind of flat on revenue. Profits down significantly year over year. Now, a big portion of their profits, they wrote down assets. It was about $9 billion of their assets. So that flows through right to the P&L as a loss to them. So that's impacting their numbers as well. Well, in the end, the numbers kind of relate what they were saying. It's tough. That being said, the question is, are you at the bottom of the trough? It's going to be a little worse. And if you look at Q1, we're saying kind of Q1, we're starting to kind of get that very base, but some of those metrics are a little bit lower. So what you really are starting to watch is what's going to happen in the quarters after Q1. Well, folks, that's the analyze tool. I understand their strategy. I can see in their numbers, their performance. Well, the last stage is the most important stage. Here's what it is. What am I going to do about it? I understand this. If I'm an employee, what am I going to do about it? Now, this is probably the most important part of a learning experience, whether it's business acumen or other topic. How can I take this information and do something with it? In our experience, it's what we really differentiate ourselves around. Being able to help people understand it and then say, what am I going to do about it? We had an opportunity for a company to look at us and say, what's the value of a program? What's the value of these earnings call webinars? What's the value of what we do? And here's what employees say they get. As you use these tools, here's what you can get from your role. 84% of them said it improved performance of the business, the whole function. 81% said it helped with collaboration, how to work across business by listening and engaging, building your business acumen, and the concepts and the tools that we provide help them to get an 81% increase in collaboration, 77% increase in improved upward communication, being able to talk to your leaders around business, 77% improved employee engagement, 75% increased business focus, and 84% improved teamwork. Folks, that's what Acumen Learning is doing. That's our goal. That's our message, to help people to do that. And the way you can do that is to apply it, to take the information, the tools I'm giving you, and do something with it. I love this quote: to know and not to do is not to know. One of my colleagues said, your mom might have said this to you. I think it's actually a proverb, a Chinese proverb. But the idea of, once I understand this, then you go back to your functional role and say, what am I going to do about it? So what I did, as I did this as if I was an Intel. If you've been with me before, I've done it as my consultant role. But I decided to do it as an Intel employee. If I'm an employee, what stood out to me? Well, we're in transition. This idea of execution matters more than ever. I've got to be really good at hitting my timelines, be on top of it within my role. Understand that cost cutting is going to impact every single one of us. Don't be fearful of it. The best people to help us determine what we need to cut is individual employees. So they go through that. Performance is key markets will define our future, and leadership uncertainty creates question. Not from a fearful, but we got to get that person in and get our strategy and moving forward. So what would I do about this? Actually, where's my sheet? I got the wrong one up. Here's what I said. Number one, improve execution, accountability in the AI and data centers. That would be something that I would focus on if I was an employee. Maximize cost efficiency and resource allocation. That's probably the biggest one. Every single one of us can impact cost. And then finally, strengthen our market position around AI, PC, client computing, whatever I could do about that. Well, folks, the last step of that tool is to say, okay, now that I've done that, if it's my own company, I can now sit down with my manager, have a conversation. Now, if you use this, maybe I'm a salesperson, I'm selling into, HP or Dell, et cetera. I might do the same analysis with my customer. Then I go and think about how can we differentiate our products within our customer base. So go talk to your sales team, et cetera. That's how you use the tool. Well, folks, that is the tool. Prepare, analyze, and apply. Once you've done this once, when you go to prepare for the next one, it's a lot easier because you have the information right in front of you. Well, so here's my question as we wrap up today. Who have I inspired you enough to say, I want to do something? I'm going to use this. Who are you going to go look at? Maybe it's a company you work for. Maybe you sell into, compete against, partner with, etc. Or next month, it's Nutrien. They're a agricultural products company, fertilizer, etc. A big player in that industry we're going to look at. But it would be a great one to take this tool, come back a month from now, and let's engage around it. Well, folks, it's been my absolute pleasure to spend some time. Here is the link for the tool. Brooklyn's put it in there for you. March 26th, we'll be looking at Nutrien, looking at an agricultural company. Great one to follow up or to practice using these tools. If you go to this website, you can download the tool. Go back to your company, review this. Go look at Intel, see if you get similar notes as ours. This can get recorded so you can come back and look at my numbers versus your numbers. And then again, if we can help you in any way, our mission is to build people's credibility, build their career, and build their company through business acumen. There's a self-paced online resource, $100 off there. Or if we can come sit with you and your teams and help you build this credibility in your organization, we'd love to do that. Thank you very much for your time and have a great day.